let's just kind of zoom in on that. We had this little area right here. We came out. We set this high up here. We've set a low down here. We are in a box. Well, no, actually we're not, because I take that back. We have not done the 50% move yet. So we're not in a box. I correct myself on that. But we are hovering around this low. We can see we've already moved 62% of the ADR. Interesting. We are in a squeeze on the 60-minute, but indeterminate on the prediction side of the break. All right. Now, the first thing that we can see, though, is this fair value gap right here, centering around this white line, which is the central pivot point. We'll call it 75. So, do we have a good shot of getting back up there? Well, it would be within yesterday's range. So we have a drop base rally candle going on right here. So one of the things that we can always do is go back. Let's go back a level. And I want to point out these kind of little consolidation areas here. Let me go to the rectangle tool, and we talk about roughly this being a chop zone right here, and maybe a little bit higher. But we say, well, that's pre-market. Nobody cares about that. Well, look left. It's right over there as well. In fact, I tell you what, let me make this box a little bit bigger to catch the tops of these candles, and I'm going to go all the way back to the left. And now what do we see? We see that these little consolidation areas stick with us. They're magnet zones. They're very much magnet zones. Well, what does that tell me as a trader? No trade inside this box, only the breakouts. Why? Because what is this? It's nothing but chop, 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 chop. It's nothing but chop. So we want to stay out of that. You say, well, where is a good breakout defined then? And a good breakout is going to be this low right here at, what is that, around 72.67, that we might break it, retest it, and then break again south. A Busby or a break, retest, bounce, BRB, whatever you want to call it, doesn't matter. We are, this big red candle right here is going to be our control candle to a great extent. So we're also, want to consider that as well. Let's take a look at the ES. Yesterday we had a rally. Now we have pulled back inside that rally a little bit, and we bounced off the pivot point. You can see our DeMark numbers right here, sequence counter, DeMark counters, did in fact call this correctly. So this is what we call confluence. When multiple things agree, we got down near the pivot point. The DeMark said it's time to reverse. So we've got two things, and it doesn't always have to hit a target. It just has to kind of be in the area of it a lot of times. But you can see with this DeMark here, we had a doji, and then we broke north of it. Now, if the DeMark holds true, we're supposed to continue going higher, with the very first target being the high of this candle here around 58.07-ish. So, we're looking at 4, 5, 6, 7 points based on where we are right now if we continue north. We do have a tiny little fair value gap here. We are again on the hourly. So we do have a little bit of a fair value gap, so it's very possible we come back down and then go back for the target. So we could go either way, but I got a feeling we're going for this high today. And very, very possible. The chart is kind of telling me we are going for this high, yesterday's high. Again, could be wrong. Remember, as Signet pointed out in his morning briefing, tomorrow is, we do have FOMC minutes coming out at, I believe, 2 p.m. Eastern today. Tomorrow is our bigger day. That's when the big weekly reports start to hit. And a lot of times when we go into those kind of zones, all we see is consolidation. So I do think, we may make a run for the high here today. If for some reason we break south, of course, this pivot point would be the most logical target. But at any rate, okay. What about the here? Pivot points are wider, which means our goal lines are a little bit further apart. You notice we've only run 34% today. IV's a little bit lower. We are in a squeeze on the 60-minute. Of course, a squeeze means consolidation and tightening up of things. So that kind of goes with the narrative of we're waiting for tomorrow. Could it break today? Sure, it could break today. But, as we're looking right here, a lot of these candles here, again, pre-market, sure, but they're very tight. And so seeing this squeeze kind of makes sense given that the pre-market, candles were a lot tighter. Obviously, the Asian session closed red. So that the Asian session did close red. We'll come back and look at that with Edgefold and see what it has to say. Looking at gold, pivot points are wider, IV's the same. Squeeze again on the 60-minute, red. So we're basically saying here, now let's take a look here. Have we worked this fair value gap in this candle right here? Well, we've stuck a toe into it right here. Now, sometimes a toe is all we need. We do see the DeMarc is triggering right here. Obviously, that gives us a target of this pivot point of 26.45. We're currently at 26.36. No real fair value gaps. Obviously, our south side target is down here at 26.27. But notice that right now on the hour, and of course we're still in that hour, we are very much in a spinning top. So we kind of had a rally base drop right here. We did not take out this the 7 o'clock high, it doesn't look like. We came up to it and rejected it. So I'm leaning a little bit more towards coming down a little bit more. DeMarc says we're going up. But again, doesn't matter what indicator you use, what statistic we use, even on Edgefold and stuff like that, there's no guarantee that they break. They just maybe kind of put the probabilities a little bit in our favor, but we still have to look at the market context to see that it's going to work. So, like I said, we have gone into this fair value gap. That still leaves this whole area. Now, one of the questions a lot of people ask is, well, how long far back do we consider a fair value gap? And the answer to that, to me, is the whole idea of the fair value gap was there were people waiting here to go short, didn't get filled, so price comes back to them so they can go short and get a second chance at going short. Well, how far back are they willing to wait? I'm of the opinion that 1, maybe 2 days at the most. Of course, a lot of it depends on your time frame. If we're looking at the hourly here, I probably, do I think that fair value gaps work on the daily level? Not really. Does it happen to get there? Sure it does. And sure that trade plays out. But I think the odds start to get weaker and weaker and weaker as we go further back in time. So we can kind of see the DeMarc here. while it does say we're supposed to be going bullish, the candle is telling us it's actually going bearish at the moment. All right, let's go down here. The NASDAQ pretty much following the ES. We've got this whole zone from down here, yesterday's low, yesterday's high. Let's zoom out and compare that. You'll kind of see that the NASDAQ and the ES 95% of the time are correlated. So they do seem to be in step with one another. I do want to talk about the SPY trade. We've talked a little bit about this whole idea of coming back. Here is yesterday's close and the gap fill. As you can see in the aftermarket, because the SPY's trading hours are 9:30 to 4 Eastern, we can definitely see that we pretty much closed that gap in the pre-market. Now, like I said, as I've said many times before, trading indicators, here's a perfect trading indicator. Here's DeMark saying we're supposed to go bearish. Well, we did. Was it significant? Okay, fine. We closed here at around 572. We did make a bearish break to as low as 570.6. We did not take out that low, and then we just turned around and kept going up and now rolling back. So one of the things that we always need to realize is that, number one, sometimes an indicator can be right, but not instantly. Sometimes there may be a delay. Sometimes they just flat out fail. So if you're going to use indicators, you want to use multiples to kind of give you a confirmation. Maybe you might add the MACD to this, or maybe the Ironclad's B4 indicator. You might add that as a confirmation and say, okay, do I get something from 2 or 3 different indicators? Price action would tell me that I see this upward trend, and I could draw a trend line from this low connecting, let's say, this low. And if I were to do that, I would say it broke, but it didn't close. It did not close below that trend line until we got up to here. Well, so this yellow line is yesterday's close. So all this actually happened in the after hours. And so if you're looking like at this DeMark here, price action tells us this trend that the DeMark failed. That's going to happen, that indicators like that, and this is why indicators only, kind of give us an idea of patterns of what's going on, but are not, and the other, are not necessarily 100%. The other thing you got to remember is that all indicators, I don't care what the descriptions are, RSI, MACD, Fisher, whatever you want to look at, they're all based on past information. They're all based on past information. Well, we get a news event or a market maker, institutional move, or whatever's going on. It doesn't matter what your technical analysis, what your indicators say or whatever. They're going to do what they're going to do. So, and remember, too, that a lot of the institutional trades are intentionally trying to take out both other institutions and retail traders with liquidity grabs. So, we see here this upward trend. We see right here this high. We see a grab for liquidity here, and then we started moving back down. So, wasn't very violent, wasn't very fast, but, that's very something to look at as well. Overall, the general markets for today, again, this is an amalgam of all the markets and that affect us, indexes, dollar, and bonds, and we are showing essentially the same kind of pattern. So you say, well, if it's the same thing, why are we showing it? We're looking to see if the overall market deviates from something we might want to trade as far as an index. If we wanted to trade the ES, NASDAQ, or the Russell, we're looking for a huge deviation from that. And we're not seeing it, so, business as usual. Again, coming back to this narrative of consolidation. All right. So what's our summary for today? All right, first of all, tighter ranges. We expect tighter ranges today. Again, I know I've said this over and over this week. Chop. And, that's just kind of, are there moves? Yes, there are moves. Do I see a move in gold? I definitely do. See, for example, we did stick a toe into that fair value gap. We came down, but I still see this pivot point, and possibly this here is a half ADR move. We have not taken out this ADR half on the one side. Still could target it, but if we go north, obviously our first target's the pivot point. Second would be this ADR right here. Third, here's a pivot point and a resistance line. Fourth, this high of day yesterday. Going back over here, looking at crude, let's just kind of notice what happened here. We went up, we came down, we had a pretty violent move down back into this chop zone. No move in crude until we get away from this chop zone, flat out. No move in crude whatsoever, in my opinion. Even though we do have this big candle right here, I just don't see it. I'm not interested in that at all today. Looking at the ES, again, no major reports to move us one way or another. Now let's take a look at this for a minute. Actually, I'm going to blow this up. Let me step back and let's maximize the ES. I'm going to move it to the 15-minute chart. Actually, let's move it to the 5. Let's go down to the 5 where we can get into some nitty-gritty. What are we trading? Because some of us are going to use the 15, some of us are going to use the 5, some of us are going to use the 1, most likely. And so let's go with the 5 as kind of the middle of the road. What do we see here? All right, let's kind of go through this. Let's start over here. I want to start right here. I'm going to go from this high to this low. Why? Because it's a high, it was a low, a move back to the middle. That defined a box. We had a breakout, and where did we go? We went, if we follow these lines to the right, we see we went to a half-measured move. Very common. Very common. Okay, so now we've moved back inside the box. Well, what does that tell us? Well, it tells us we have a bigger box now. And so now my box is going to be from this low, come here, click. What's the matter with you? Click. Maybe I have to just hold it for a moment. Now click. So we had a box breakout. We came back inside the box. We now have a new box that is wider because we've got a significant low that took out lows. We've got a significant high that took out highs. A move back into the middle. All right, so that being the case, we have two choices here. One, we can wait for the breakout and close, breakout with a close outside of the box, and then the next candle continuing the breakout. That would be the trade on either side. That would therefore put your targets at like 57.58 on the low side, and on the north side 58.22 to the north. Okay, now the other thing that we can do, now let's just kind of zoom in And I'm going to add, if you want to trade inside the box, we can add standard deviations. I'm going to put them 5 minutes. That would be 12. We'll have to go. Okay, so 120 is going to be the last 10 hours. I don't really like that number so much. Let's go with the last 4 hours, which will be 48 samples, because there's 12 5 minutes in an hour. So the last 4 hours would be 48. And let's put that on here. Okay. Now let's zoom in and scale things. Okay. As a matter of fact, let's get this trend, let's get this Fibonacci off here just so we can see things a little better. Okay. Notice, first of all, the trend is bullish. All right. The trend is bullish, and on the smaller time frame, there's always a box to be found somewhere. I could find a box from this low to this high if I wanted to. But looking at the SDC itself, I don't like the, hang on a minute. Let's just kind of open this up a little bit. Let's take a look. Chop, right here. Chop zone. Stay out of it. Drop, base, rally. We see that right there coming into this fair value gap. For one thing, where's it heading? Well, it's heading most likely back to this center. The white line here is the center, the linear regression line. That's the center of trading for the last 4 hours, because that's how far back we're looking. Where did it go? It went all the way out here. So the red is a half standard. Green is a full standard deviation. Blue is a half. And then this is a 2 standard deviation. So we came out here to at least 2 standard deviations. Now theory says that if you hit an outside deviation, there's a very good chance you'll hit the one on the other side. No guarantee, obviously, because we did hit it here and we came back and hit it here. So we could argue that that full move has been made, and so we're not owed this one over here. But we generally are owed the one in the middle. So the way we typically trade these standard deviation trades is when we, number one, see that when we start to say, okay, I've got a reversal signal. We wait for till we get to the outsides. We look for a reversal signal to go back to the middle. So here we had a drop, base, rally. On the break of that rally, we would go long, targeting the linear regression for the first target, and then the second targets would probably be this line right here, this high right here at 5,800. Imagine that. Can it fail? Well, of course it fails. Where does your stop go in all this? Depends on how tight you want to be. Obviously, we see that this did break it, but it did also come back and pull back, and then, I don't know, obviously we'd have to go to the minute chart or less to see which way it went first. Did it open here, go down and then up, or did it go up, down, up? We don't know without going to smaller charts. So you'd say to yourself, well, ooh, golly, that's a from 95 to 92, 3-point stop. That's not a bad stop, but if that's too much for you, then go to the bottom third of the candle. If this trade rolls more than 50% back on that, then we know we're in trouble. we really know we're in trouble if we come back to that bottom third there. So the same thing on this trade going north. I'm looking at this candle right here, and the midpoint of that candle right about here, the top third of that candle maybe about here. That's where we have tapped the high already. If we have hit that third, there's a very good chance, that top third, there's a very good chance we're going to continue north. So generally it's the halfway of the candle. If we continue past the halfway, we talk about halves and wholes, just like especially Jeremy loves that particular strategy, the halfback. We talk about halves and wholes. So if we have closed above that half, that is a good take profit, certainly. That is a very good take profit. You can see we're kind of rejecting here. So if we had gone long right here, our first target obviously could have been the half. And then, of course, if we can clear that, then we're looking for the linear regression line. So I actually initially said the linear regression would be the first target. Let me correct that statement and say the half would be of that bar would be our target. I've talked about this chop zone right here, and we say no initiating, no beginning a trade in this chop zone because it's chop, it's consolidation, but it is a good target. So if I am long, I can target a chop zone, and that's fine, but I don't want to take a trade in here because we can clearly see that it's going up, it's going down, it's going up, it's going down. We don't know what the direction is going to be. And we can say, well, if I have short stops in there, tight stops, I might just get the runaway candle from home. Well, no. That's like the baseball batter stepping up there and saying, I'm going to swing at every ball and hope to get a home run. Well, no, that doesn't work. They don't do that for a reason. They judge the pitch coming in, and they judge whether they're even going to swing or not. So just like in baseball, we need to look at the bigger picture and decide even whether or not we're even going to take the swing. And I'm telling you that when we get into these chop zones, don't take the swing. Okay. Now, that being the case, let me bring up my list of things to cover. Let's take a look at the Asian session here for the ES. So it's whoops, not what I meant to do. Give me this finger thingy, or the pointer rather, here. We're looking at this session here. Let's normalize. Okay, it is normalized. All right, fine. Now, what happened? So here's the initial balance. So let's just draw some boxes here and get some idea. The initial balance, which started right around here. Here. Come here. So there's our initial balance. If we zoom in on that, we can see that we wicked out but no close. That's one of the things so many people, we see that wick and we jump. Well, now granted, if we went down to the 15-second chart, we would have said go long, because on the 15-second chart, again, we're on the 5-minute, well, there's going to be 20 15-second chart candles on this. If we went down, and if we went to the 5, there's going to be 40 or whatever kind of things. And there probably was a close and then another breaking candle that went above it. That's why we always need to look at the higher picture. And so anyway, we look at two time frames. We look at a higher time frame for the trade. We look at the lower for the entry. Now, if we'd been looking at this and say we're on the 5-second chart or even maybe a 1-minute chart, we may have seen a close and then a break of that close, and we may have gone long. Okay, fine. But the thing of it is, obviously we would have been stopped out. Okay, it happens. We come back in, though. Now we begin the Asian session, and let me back out a little bit, and let's get over to the Asian session, which started at 8 and went until 2. We can see this was the high, and looks like roughly right around here. There's the Asian session. We can see that it closed much lower than the high. So obviously, therefore, we moved around down here. What do I see here? Very roughly, very crudely, we see essentially a head and shoulders with a rejection. What do I mean? We've got, and I really don't have very good drawing tools here, so right here, follow my arrow here. Let's zoom in on that. We've got a left shoulder. We've got a neckline. We've got the head. Come back up. Lower neckline. Right shoulder. Did we break it? Well, yeah, we did right here. Did we continue it? No. So yeah, we closed outside of it, but the next candle did not continue the trend. The next candle is your entry. It didn't qualify because only if that candle had broken this candle's high would we have gone long. Well, it didn't. So at this point, it's a failed head and shoulders because here was the neck right here. We did break, we did close above it, but no continuation, no trade. Now, granted, if you were on, if this candle had continued, we'd say, well, what are our targets? And that's when we start looking at more significant highs. Obviously, it did pull way back. We had this drop, base, rally, continuation. We took out this high right here. Notice it right here. And finally, with this candle, we went long. We could have gone long right here. So again, look at the whole bigger picture. This would have been our first target. Let's bring that over here. Notice what happens. We hit it right here. We break it. We reject. We break it. We did have a continuation candle. We had a pullback, and we continue. So, okay, we did have a long signal here. Where would the stop have had to go? The low of this candle right here, and then off we went to the races. So the key here is, the key here is to look at the bigger picture. Always look at the bigger picture because that gives us all of our targets, and that gives us all of our targets, and it also gives us the overall move. So going back to the SDC, we were talking about that. So, okay, there it is. We hit it. While I was talking, we had this drop, base, rally. We did hit a major point down here on the SDC, telling us possible flip. We would have gone long right here. We've hit this. Now we got to see how far it's going to go the other way. So in this particular case, there probably wasn't a lot of profit in this move. Certainly, you could have just left your stop sitting back here and just say, well, how far is it willing to go? Your stop should at minimum be break even by now, and you're just waiting to see how far this is willing to go. We look for these reactions to happen at the full deviations. Green here is a 1 deviation. So I'm looking for a reaction right here. to see is it going to continue or is it going to roll over. At this point, I'd move my stop up to the bottom of this candle. I've locked in profit, some profit. My first target would be, and we did hit it, this line right here. So there would be your very first take profit. Well, excuse me. The first take profit would have been half of this red candle, then the standard deviation line, then this target, then this target, and then now we're just watching, unless we can always look left to find more targets, but if we don't see them in the short term here with the standard deviation, then all I'm going to be doing is moving up my stop and chasing it. It has hit 1.5 deviations up here. It's come back to the 1. I could put my stop right here to lock in that. I could come 50% of this candle. We talked about the 50%. So I could take this candle, put my stop at 50% of it, and lock that in, saying that if we're going to turn, at least I've locked in that amount of profit. So anyway, all right. So there's all that to talk about as we talk about the chart. Let's bring up the Rorschach chart that I gave us this morning. This is all you get. This is all you get to look at on the Rorschach chart. And so when we look at that and we say, this is it. I don't get to look in the past. What do we see? So let's start with a couple things here. First of all, we kind of see, we're going to start with crude over here. And it would help if I put this on white. Yep, there we go. We see this. We see kind of that. Now, we see a little bit of a channel right there. Now, does this tell us it's a breakout? Well, no, obviously it's not a breakout. We can see that it clearly did not break out. Why also would I not expect this to be a breakout? Two reasons. Number one, early in the pre-market, we don't anticipate a lot of big moves. They do happen, but we don't anticipate a lot of big moves in the pre-market. Number one. Number two, let's see. Let's zoom in on that. While we were in the channel, we already touched inside that fair value gap. Now, yes, I could say, well, maybe we'll grind back up here. Not a lot of range in this sideways movement. Obviously, we can see that they decided to take a bigger move here later on. But, again, taking in context, I don't see a big runaway candle telling me a change in market sentiment. So, plus it was in the pre-market, so I really don't have a lot of incentive to say, well, maybe we should go long here. Now, that being said, I have a friend of mine absolutely hates that expression. What do we see here? A drop base rally. Again, halfway, look where it is. Look, at the time that I took this picture, there's a half back right there. There you go. There's a half back move. All right, now let's look over here at the ES. Quite the opposite. We see, we see a chop area right here. No trade in here. From there, we see let me get a line tool up here, a general trend up. I'm not particularly marking either the high side or the low side, just an observation of a general trend line. Now we've got a line going down. Now what does that kind of tell us? Well, it's a pullback, very possibly. Where would, let's zoom in on that. So, where's my trade on this? Well, first of all, notice we had the demarc. We talked about that earlier. We did make the half back move of this overall trend. We did come half back. We did it one big violent candle. Where's my target? Here's my north side target. Here's my south side target. And of course, we've got this pivot point right here to consider. So, but also notice, what are we also in? We are in very, very noticeably, as I just talked about, a box. We're in a box trade right now, so if you want to trade within that zone, we'd be looking at a SDC. Also notice, this little chop area right here, that makes for a target and a no trade zone. Okay, no initiating a trade. So no trades down here, no trades here, and so on. All right, finally, I need to start wrapping up because I'm sure Creed's getting ready to come in. Looking over here at gold, what do we see? Chop right there. We do see, so that's a no trade zone. We did come into this fair value gap a wee bit. We came back in it a second time. We went down, drop, base, rally, back out. DeMark says north. And so again, we're looking here. So my point is, I'm not trying to say that anybody's strategy is right or wrong. What I want you to see is that when you look at a chart, you get a full view, an understanding of the chart. It may not be your trading strategy. That doesn't matter. Like right here, I could say that if I was a supply demand, I could say that is a demand area. You know, I could very likely call that a demand area. I could also call this a demand area. It was a chop zone. It does, these chop zones do make for magnets. And so they do make for magnets. Creed's getting ready to come in here, so I need to go ahead and start clearing the channel. So, you know, you could call that possibly on a higher time frame, whatever, you may call that a demand zone. There's many ways to see this. You just got to look at the chart, learn other patterns. You don't have to trade them, but you do need to see them. And that's the point of doing the Rorschach charts in the morning. All right, with that, I'm going to sign off and yield over to Creed. And I hope everybody learned a little something here, a lot that we covered today. Certainly, if you have any questions. We did not, unfortunately, get time to get over to Edgefield today, but, you know, that's okay. Again, consolidation day for the most part. So, you know, again, another good SDC, standard deviation, linear regression type day, in my opinion, until the market really starts to move. With that, this is Marziti signing out. I hope you guys have a good day. And remember, if you can't be good at it, if you can't be good, at least be good at it. All right. We'll talk to you guys later. Y'all have a good one. Bye.